Stocks sold off today following a stronger than expected report on economic growth that stoked fears that the Federal Reserve may start to pull back on its bond buying program. Third quarter GDP rose 2.8%. Expectations were for 2%. Couple that with a drop in weekly unemployment claims as everybody waits for tomorrow's October jobs report, and you have the recipe for a sell-off, and that's exactly what happened. The Dow falling nearly 1%, or about 153 points, to 15,593. A weak tech sector weighed on the NASDAQ, dragging that index down 74 points, and the S&P slid 23.
Well, that stronger than expected GDP numbers surprised economists on Wall Street, but analysts are warning that hangover effects from the government shutdown last month will likely temper growth in the fourth quarter. Steve Leisman has more.
Economic growth was hotter in the third quarter than investors expected, but that could be cold comfort in the months ahead. The government said gross domestic product rose by 2.8% in the third quarter, the one we just finished, well ahead of the 2% consensus and the best quarterly number in a year. But the data accounts for growth before the government shutdown and the controversial debt ceiling debate that many economists believe weakened growth in the current quarter. Still, it's better to have more momentum ahead of a slowdown than less. Here's where the growth was. Housing surged ahead by 14.6% at an annual rate. Durable purchases by consumers was up nearly 8%. Exports were up 4.5%. And inventories, there was a big inventory build, up $86 billion. Consumer spending, though, overall pretty weak at 1.5%. Business equipment purchases fell, and federal government fell by 1.7%, their spending. It's the strong growth in inventories, along with concerns about the shutdown, that makes economists concerned about the current quarter's growth. If businesses put too much stuff on the shelves in the last quarter, they'll spend this quarter working it off, which means fewer new orders. Together with the expected effects of the shutdown, fourth quarter growth is seen at an anemic 1.6%. One shot in the arm for global growth could be from Europe. The European Central Bank cut its overnight lending rate today amid concern about declining inflation. ECB President Mario Draghi signaled more measures could be on the way. There'll be far more attention paid to tomorrow morning's delayed October jobs report for clues to the outlook for growth and for Fed policy. For Nightly Business Report, I'm Steve Leisman.